Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the company that everyone's talking about by diving into their latest financial filing. Today, we're dissecting Marvell Technology's latest 10Q report. Get ready for some eye-opening numbers. Marvell is a big player in the semiconductor world, designing chips that power a lot of our tech, especially in areas like data centers and 5G. They've just dropped their report for the period ending August 2nd, 2025. Let's dive straight into the money. For the 3 months ending August 2nd, 2025, Marvell brought in just over $2 billion in net revenue. That's a massive 58% increase compared to the same period last year. So not only are they selling more products, but they're selling them at prices that are bringing in a lot more cash. This surge in revenue directly translated to their gross profit. Gross profit, which is basically revenue minus the direct costs of making their products, jumped by a huge 72% year over year. This means they managed their production costs pretty well, even as sales soared. Their gross margin, that all-important percentage of revenue left after direct costs, improved from 46.2% last year to over 50% this year. That's a really healthy sign. Now, what did they spend that extra money on? Research and development, or R&D, costs went up about 7% for both the 3 and 6 month periods. This shows they're still investing heavily in new tech, which is crucial in the fast-paced world of semiconductors. Selling general and administrative expenses, which cover everything from marketing to management salaries, actually went down slightly. This decrease was mainly because of lower costs related to acquired intangible assets, meaning they're getting more efficient in these areas. Let's talk about debt. Their interest expense, the cost of borrowing money, increased by about 7%. This makes sense given they've taken on more debt recently. And after all that, the bottom line, net income for the 3 months ending August 2nd, 2025 was nearly $195 million, $5 million, $5 million. That's a huge turnaround from a loss of over $193 million in the same period last year. They also saw a significant increase in net income for the 6 month period. Looking at their balance sheet, accounts receivable, meaning the money owed to them by customers, increased quite a bit. This is often a sign of higher sales, but it also means they're waiting on more cash. Inventories also saw a slight increase. This could mean they're building up stock to meet anticipated demand, or perhaps they're holding on to more products than they can sell quickly. Marvell carries a massive amount of goodwill on its books, over $11 billion as of August 2nd. Goodwill happens when a company buys another company for more than the fair value of its assets. It's a really important number to watch for potential future write-downs if those acquired businesses don't perform as expected. Their acquired intangible assets like patents and brand names are also substantial, sitting at over $2.2 billion. These are also subject to impairment, meaning their value could be reduced if the assumptions behind their valuation prove wrong. On the equity side, Marvell's common stock is valued at about $1.7 million. That might sound small, but remember, this is just the par value, not the market value. Additional paid-in capital, which is the amount investors have paid for stock above its par value, is a huge $114.2 billion. Interestingly, they still have an accumulated deficit of over $800 million. This means that over their history, their total expenses have exceeded their total revenues. But with the profits they're making now, this deficit should shrink rapidly. Now let's talk about a big strategic move. Marvell announced in April 2025 that they're selling their automotive Ethernet business. They've even put the assets related to this business, including over $500 million in goodwill, into a held for sale category. This sale for $2.5 billion was completed right after the quarter ended. They expect to book a gain from this sale in the next fiscal year. This is a move to focus more on their core data center and networking businesses. The revenue breakdown shows just how important the data center market is for Marvell. For the 3 months ending August 2nd, 2025, data center sales made up a massive 74% of their total revenue. That's a significant concentration risk. If the data center market falters, Marvell will feel it hard. Geographically, China remains a huge market for them, accounting for 29% of revenue. However, Taiwan is also a significant destination, not necessarily where the end customers are located. When it comes to customers, they deal with both direct customers and distributors. Distributors account for 41% of their revenue. Let's circle back to debt because it's a significant area. As of August 2nd, 2025, Marvell had nearly $4.5 billion in outstanding debt. They've been actively managing this, repaying some loans and issuing new senior notes. This is a common juggling act for growing companies. Marvell also initiated a restructuring plan in the 3rd quarter of fiscal 2025. This involves shifting investment towards the data center and reducing investment in other areas. This kind of restructuring often comes with charges and gains, and they reported a net gain for the 6-month period, which is a bit unusual but suggests it went smoothly. They're also heavily using stock-based compensation to attract and retain talent, awarding over $295 million in the first 6 months of the year. This is standard for tech companies but can dilute existing shareholders' ownership. Now for the risks, and Marvell has quite a few. They're heavily reliant on a few big customers, and a major part of their sales comes from the data center market. That concentration is a big red flag. They also face significant risks from global trade tensions, especially with China, and any changes in tariff or export controls could seriously impact them. They also mention the risk of not being able to protect their intellectual property, which is critical in the fast-moving tech industry. Indeed, 2 customers alone represented 16% of their revenue in the latest quarter, and their top 10 customers account for over 80% of their business. That dependency is always a concern. Their reliance on third-party manufacturers is also a big risk. If these partners face disruptions, whether due to natural disasters, political instability, or even just capacity issues, Marvell's ability to deliver products to their customers could be severely impacted. They're also vulnerable to economic downturns, inflation, and rising interest rates, which could reduce customer demand and increase their borrowing costs. And because they sell based on purchase orders rather than long-term commitments, customers can cancel or delay orders, making it tough to predict demand and manage inventory. Overall, Marvell is showing impressive revenue growth and a much improved profitability picture. The sale of their automotive Ethernet business appears to be a strategic move to sharpen their focus on their most lucrative segments, especially data centers. However, their heavy reliance on a few large customers and the data center market, coupled with the risks associated with global supply chains and trade policies, are significant factors to keep an eye on. Their massive goodwill also introduces a potential for future write-ins if acquired businesses don't pan out. So what's my take? Marvell is definitely in a strong growth phase, particularly benefiting from the AI boom. The management seems to be actively managing their finances and strategically focusing their business, but that customer concentration is always a concern for investors. What's your opinion on Marvell's latest performance and future outlook? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more in-depth analyses of company filings. And don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching. See you next time.